Testing, testing, 1, 2, 3. Having some audio issues. Let me know if you guys can hear me coming through in the chat. Not sure if it is working. Looks good on my end now. Okay, appreciate you, brother. Thank you. Yeah, that was definitely it's definitely some user error on that one. That was my fault for sure. So let's get that started a little over there. So welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on February 23rd, 2022. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So obviously, lots going on in these markets. And, very fortunate, obviously, that we've been on the right side of these markets and prepared for all this. Everything is basically just playing out as expected. We're seeing quite a bit of volatility in crypto and stocks as well. We're seeing gold still strong, oil still relatively strong, or at least holding for now, energy in general. We're seeing the dollar starting to pick up steam again. We're seeing the yields just kind of hanging out around the highs. And then, of course, we're seeing stocks get, the indexes are definitely, they're hitting new lows from the high. So we're confirming a downtrend. And then, obviously, crypto is just getting absolutely wrecked. We did see a little bit of life out of crypto as it sort of broke out of that descending channel, but underperformed completely. And more than anything at this point in time, looks like we are basically just getting a retest before a continuation to the downside. What's going on, Asotos? Love the MetaMan on the thumbnail. Yeah, definitely recycled that one a little bit though. So, but it's always funny seeing, appreciate everybody for chiming in. Hunkiness, Eli, appreciate you, brother. Christoph, thank you, sir. How you doing tonight? Okay. Wait, the sound is good now though, yeah? Yeah, sorry about that sound issue. That was definitely my fault. But everything should be good now. So let's go ahead and get this stream rolling. Just let me know one more time if everybody can hear me loud and clear right now. It looks good on my end. So, but in the meantime, we'll go ahead and just proceed. Not sure why Hunkiness said sound is gone. Hopefully it's not cutting back out. All right, so yeah, let's just jump right in and then we'll address it if there's still some kind of issue. Okay, great. Loud and clear. Thank you, brother. So yeah, that I may have just been on delay there. So let's take a look at the TNX first. So we have our 10-year Treasury note yield on our Treasury bonds. So obviously, we came up here, we tagged our target almost perfectly at the 2.0 level. And now here we are at the 1.97 level. So essentially we were just hanging out at the highs. We do have a hard sell signal on the daily, a bunch of red histograms. We did have some bearish divergence basically, or, close to a double top on our indicator oscillators, but much higher action on the actual yields themselves. So it would not be unrealistic to think that we come down some, but the fact that we're just consolidating at these levels, is it crazy to think that we just kind of hang out up here and kind of just trend down and to the side for a little bit? I think this is basically just a front run of the Fed. And now obviously, we have a Fed meeting coming up in March. The Fed has said they're going to raise rates. And then all of a sudden we went from the Fed can't raise rates to now, I heard big banks talking about 10 rate hikes now. I heard someone say 12 rate hikes now this year. Like, that's literally not even possible. That would be over one rate hike per month. The Fed doesn't even have that many meetings in the month. So, like, talk about one side of the spectrum to the other. Like, are these people insane right now? Like, are people that brain dead? They're always so late to the party. But regardless, so we know we came up here, we tagged our Fibonacci level perfectly, the 786. We basically have leveled out at this level. So the truth is, we basically have a descending, pink resistance line here just above our heads. And then we obviously have our key Fibonacci level from the high to the low. So we tagged that. Would not be unrealistic to think we just kind of consolidate around here. But we know one thing for certain. While we were kind of consolidating in this range, we saw the 200 simple cross above the 200 exponential, and then we saw the 200 exponential cross back above the 200 simple, telling us that the trend is still strong and accelerating to the upside. And when we switch over to our longer time frames, we see this might just literally be getting started. Now, it's not unrealistic to think, like here we broke above the 200 exponential and simple, we flipped them both over blue, and then we came all the way back down over, we're on the weekly now, over the next few months and retested that level, and then we went much higher afterwards. Not unrealistic to think the same thing happens. If you came to me in a couple months here and told me we retested this top here, and the 200 exponential and simple at like 1.6, I wouldn't be surprised at all. I honestly wouldn't. But right now, what we're seeing is this thing still has legs on it. I mean, some serious legs on it. We're literally just now confirming into a bull market. The 200 exponential is already flipped up. 200 simple is getting ready to flip up. We have the 8 and 21 cross to the upside in our favor. We're above all the moving averages. We have a bunch of green histograms. We're above the red slope line on TJD TDMACD. We have our jewel thief in the bullish control zone. What does that mean? Oh, we're overbought. We're already at these levels. It can't keep going higher. This means the opposite. Everybody keeps saying we're overbought, we're oversold. Now's the deep value territory. It's peaking. That's not how things work. That is literally not how things work. The purpose of the bullish control zone and the bearish control zone above 80 and below 20 tells you that the opposing force is, there's no life. They're dead. One side is completely in control. When we're at neutral levels or even in the middle of the range, there's at least a fight going on. When we're above 80, whatever asset we're looking at, that means the bulls are in control. The bears are dead. They're murdered. They're nowhere to be found. They're hibernating. They're extinct. They're gone. So when people say things like overbought and oversold, it doesn't make sense to me. Some people want to trade like that. Shorter time frames, longer time frames, sure, that's fine. But if you've ever heard the expression, the market can stay irrational longer than you can stay liquid, that the whole purpose of that expression is to tell you that people who say overbought and oversold are dumbasses and in the end lose everything. That's literally what that expression means. And that's probably one of the most famous finance expressions of all time. So sure, the bulls are in control. We're at the top of the range. We're at high levels. Can the bulls stay in control for months or years and completely destroy your bond portfolio if you bet against the rates? Yes, that can 100% happen, or on a stock or on a crypto or whatever it is. So there's a reason that these well-known sayings have been around for decades, sometimes hundreds of years, because they're true. They make sense. And that's one of them. That's a perfect example of these people, these main influencers, these talking heads on CNBC, these financial advisors, these traders, these technical analysts being made fools of because they're so used to a bull market that they think that everything is just always going to be bullish. And most of them, I don't mean to diss on young people or disrespect young people or whatever, but there's a reason there's a difference between, smarts, intelligence, and wisdom. Wisdom comes with age. You can be intelligent, but have no street smarts. You can have street smarts, but have no wisdom. With age comes wisdom, a combination of intelligence, smarts, street smarts, experience. That's why wisdom is so important. And these people don't have wisdom because they've never seen anything but a bull market. Or if they saw a bear market, it lasted for 2 months and then, it was like the ultimate biggest bailout in all of history. Most of these people that are influencers, that are talking heads, that are telling you not financial advice, haven't even been around for a market crash before. Most of them haven't even been around for a crypto bear market, more than 3 or 4 years, let alone a stock bear market, let alone a recession or depression that was like legitimate. Most of them haven't been around since 2008. Most of them haven't been around for 2000. Definitely almost nobody, has been around since in the 80s, 70s. Those people are laughed at right now. And now look, we got to be real careful in these markets and who we listen to. And remember those big statements like, markets can stay irrational much longer than you can stay liquid. There's a reason that things like that are said and repeated, and you find them in books from wise men that have been around much longer than us, or wise people, regardless of, I can't do this politically correct thing. Anyway, let's keep rolling here. So, Appreciate you, man. Oh, okay. We got our first bot. Bots in the chat. Bots in the chat. Brr, 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 brr. Should we put them in timeout? No. All right, let's go. So U.S. oil is next. So obviously U.S. oil up here at the top of the range. We have topped out here multiple times. We basically have, all but bumped our head on $100. We hit $95.69 on WTI crude. We don't have to just top out right now and roll over. But at this point in time, we're basically forming like a little flag pattern. Now, typically this would be bullish. We have a high, then a lower high, we have a low, and then a series of higher lows. Basically is a neutral pattern at the top of an uptrend. It is a small pattern, obviously, but in all reality, what I'm paying attention to is we have a high here, then we have a low, then we have a lower high. So one of two things is going to happen. We're either going to take out the high at $95, $94.87, and it's still bullish, and maybe we continue up to our Fibonacci and that target of 97 or exactly 100, whatever, or we're going to take out this low right here at $90.60, and then we break down from there. Could we break up higher here? For sure. I think most likely we're going to break down here. Now it is possible we break up and create some divergence, but we see here very clearly, leave the bullish control zone, buy, sell signal right here, and then we break down. We even got a fake out buy right here, so we had a sell, buy, sell. Here we leave the bullish control zone. We got a sell, buy, sell. We break down. Here we leave the bullish control zone. We get a sell, a buy, a sell again. We break down. And then here we have a sell, a buy, a sell. Leave the bullish control zone. So more likely than not, I think we do the same thing we did every other time we break down. Now look, we had blue slope on the TJD, TDMACD. It flips over red. We break down. Blue slope flips over red. We break down. Blue slope flips over red. We break down. Blue slope, we're right about to cross below it. We're at it right now. We have all red histograms. So more than likely what happens right here? Well, we probably break down below this. The slope flips from blue to red, and then we break down and retrace. Do I think the energy trade is over? No, I think it's probably just going to cool back off a little bit, the same way it did for these other 3 times along the way where we had clear divergence showing up on our longer time frames. So that's what it looks like to me. If it shot up higher from here, I wouldn't be surprised, but I am taking profits on many of my positions along the way. Obviously this is a trade that has been working though, so it's very possible that this is where the momentum is going to keep going because there's not a lot of other stuff right now that's working. So let's look at the VIX next. So obviously, okay, like looking at the long term on the VIX chart, we know obviously that we basically have mapped out a giant sideways channel. The top of the channel in red is maximum volatility. The bottom of the channel in green is minimal volatility. Typically, we see our peaks here at the top when stocks are getting destroyed. When there's massive volatility, it's usually to the downside. We see our peaks here to the downside when there's maximum like complacency taking place. Inside of that pattern on the daily, we identified obviously the CVD spike right here, that old Rona spike. That was obviously massive volatility to the downside. After that, eliminating that top because that's basically a blow off top. I don't like to use those for charts because often the euphoria to the upside or the fear to the downside is not in line, with what's actually taking place. So a lot of times that outlier will not fit correctly into the pattern that's taking place. So in this case, in many cases, I will eliminate the initial spike and then I'll go from there. So here we have a descending channel. We operated inside of that channel basically from our breakdown in April of 2020. And now here we touched out of it one time, we broke out of it, and then we came back down, retested the heart line, and then we broke out of it again, came back down, retested the heart line of the macro channel now. So keep in mind we had resistance along the macro channel and then support along the macro channel, and then we broke down from it. And then again, we saw resistance multiple times throughout this range, as we also saw resistance inside of our daily channel, the descending channel as well. And then at that point in time, we started to create this channel breakout right here as well. And I know this channel is loaded with channels. Oh, terrible joke. Anyway, so we have this high right here. We have our low, our double bottom, which at that point in time, when we came back down to it, we were expecting volatility to pick up. We come in, we put in a higher high. So now we have a low, we have a higher high. We have a high, we have a higher high, we have a low, then we have a higher low. Now we have 2 touch points to pay attention to. And then what happened after that? We came back up, touched to the top. We basically got our measure move breakout of our, what was that of? I don't know what that was of. I was thinking it was of the channel, but that's obviously not of the channel. Hang on one second. Was that, oh, that was the W. That was our W breakout from the neckline right here, maybe? I don't know. Doesn't matter. Regardless, we're going to steal this. I'm taking this. Whatever we were looking at the time, it played out nicely. But now we're paying attention to, you know, the larger breakout, which technically should go from back here. And now that's going to be the width of the actual full channel right there. So that's what we're paying attention to now. So we're looking for this actual move to continue to the upside. So now we have 3 highs right here, and then we have a series of 3 higher lows as well. So now we have a channel and a breakout of this channel acting as support now, and now we expect continuation to the upside. So we're going to keep following that and seeing what that does as we continue to just grind higher right here. And then we know eventually when we get inside of this bullish control zone, we know that's going to probably line up with a macro top in volatility, you know, on our longer time frames, and basically tell us, okay, now we should really be looking for potential. Now, granted, you know, how many days do we spend inside of this? Sometimes it's literally just one spike. Sometimes we spend weeks inside that range, but we know that's the real area we start looking for, like actual, you know, bear market bottoms type situation. So, but at this point in time, we know volatility looks like it's going to be increasing. So what does that mean? Well, it means, you know, probably expect more of the same, more wild moves in the markets, less stability, more liquidations, probably more downside, you know, based on history. So, so let's switch over to our indexes. So we did something very important. I believe is the last stream we were talking about this. We had basically closed at the low right here. And what I was saying was once we put in that peak right here, and then we put in our low right there, we then put in a lower high right here. So what we were paying attention to is after this close right here, we know that if we broke down from this level and put in a lower close on a daily, that was confirmation of a downtrend. And you know what? I think I might have just shared this in the group, but this is what we're paying attention to now. Basically now we have a confirmed downtrend. So we have a high, then we have a low, then we have a lower high, and now we have a lower low. So what we're paying attention to now is, yeah, sure, could we bounce right here? Definitely. We come all the way back up and retest our support here in green as resistance, you know, and that's volatility. Volatility doesn't just mean we go straight down. It means that we don't just have like this nice little, you know, melt up that's been taking place for literally months and years at this point in time, where everybody looks like a genius because they just buy every dip. So yeah, sure, we could bounce up here right away, and that's volatility. We could drop down from here right away. That's volatility, 100%. You know, but we've been talking about bearish divergence. We've been talking about distribution taking place. And now here we're breaking down from key levels and confirming a downtrend on the daily. So we need to pay attention to these areas we've identified to the downside. And you guys know, obviously, we have our purple resistance, which will be support theoretically when we come back down to it. And then obviously we have here, you know, this one is much less reliable, but we have a couple touches along the way right here in yellow. But most importantly, we have our red resistance, which was previously the top from 2020 before the capitulation move. And then that was our resistance multiple times when we came back up to it. And then now we would expect that to act as our support when we come back down to it. And it's a nice round number right at 30K. So that is what we're paying attention to for the Dow. And let's keep in mind too, that the Dow topped out over 36,000, almost 37,000. So that's going to be an over 20% drop right there. So right when we get to support is when the market, the talking heads, the analysts are going to be talking about we've confirmed into a bear market. That's when they're going to be saying it, when we confirmed into a bear market. Right when we hit support, they're going to say, Dow Jones officially in a bear market. It's down 20% from its all-time highs. That's a bear market. That's a bear market. We should be bearish. Right at support is where they're going to be saying it. Mark my words. Might be weeks from now, might be months from now, but if we get there, that's exactly what they'll be saying right before we get a massive face rip bear market rally that takes us way to the upside, completely destroys all the people that were late to the short party, and then of course we just continue to the downside further. Or maybe not. We'll see what happens when we get there, because that's support. But I'm telling you, they're always late to the party. They're always wrong at the worst time. So here we have confirmed into a downtrend. How do we determine a bear market? And why are we so far ahead of the game? Well, we knew it already. We knew it right here. Because what happened? The 200 simple flipped over bearish. The 200 exponential flipped over bearish. We confirmed into a bear market on the Dow Jones already, way before they do. So where are they going to know at? They're going to know when we're down 20%. So we know right here, after we close below that and they flip over bearish, they're going to know down here. So we're ahead of the market by 14%. So they're going to take a 14% kick in the face. They're going to get their teeth knocked out, and then they're going to sell the bottom when we sell the top, and then we're going to buy the bottom, for a scalp back to the upside. Got to just keep it simple, stick with what works, and just not listen to all these moronic people. So many people are already being exposed left and right for not having any idea what they're talking about. Fake technical analysts, fake influencers, fake, market entrepreneurs, whatever, left and right. They're just getting absolutely destroyed for over leveraging, for not having any clue what they're doing. They're going on Twitter in the morning or TradingView in the morning and taking someone else's technical analysis and then sharing it and acting like it's their own, whatever the situation is. They have no clue. They have no plan. They have no strategy. Just make sure that you are figuring out what you're going to do if we go down from here or if we go up from here. Gambling oftentimes and risk reward is something we talk about on this channel. And I think one thing that people don't understand is when you go to a poker table or when you go to a blackjack table or something like that, or craps or whatever it is, when you put your money down on a table, at the end of that hand, you get your money back, and then you get to choose, do you want to ante back up and play the game again? You have to decide to actively participate in that. That's not how these markets work. Once you put your money in the market, you're in the market and you're actively participating until you choose not to. And that is the difference, and that's where a lot of people get into trouble is. They don't realize that if you do nothing, you still play the game. The dealer still gives you cards. Whatever gets rolled on those dice still affects you. So you have to actively pay attention and make decisions in these markets. You cannot act like a deer in the headlights and just freeze and say, well, we're already down this percent, so I can't sell now. Oh, my stop loss is about to get hit. I can't sell now. Whatever the situation is, you have to reevaluate. It's okay to be wrong, but it's not okay to be wrong and do nothing. And this is not financial advice. I'm not telling you to buy. I'm not telling you to sell. I'm telling you to make sure that you predefine. And if you have to do it, especially in the beginning, write it down on a piece of paper, keep a trade journal, and write down, this is how I know if I'm wrong. No matter what happens, if this happens, I'm closing my position. I'm selling. I'm taking profits at this level, whatever the situation is. But have clear, definable areas, and make sure that you are purposefully playing the game. Because if you just sit there and you just deer in the headlights, you're playing the game whether you want to or not. You're getting cards whether you want to or not. It's on you. Check or hit. So let's look at SPY. We're seeing the same exact thing on the S&P. We have a high right here. We have a low. We have a lower high. And now we have a lower low confirmed as of yesterday's candle. But again, a very bearish candle today. And now what do I always talk about with these candles? When we see the market close at the lows, what does that tell us? That tells us with an extremely high probability, we're going to see a continuation. We very rarely see a candle with no buying action going in towards the daily close on the stock market where we don't see continuation if it closes that close to the lows. We want to see some buying coming in towards the end of the day, or else we're very, very likely to see continuation to the downside. In pre-market and, after hours trading, sure, you could count that for something, but more often than not, we see, continuation. Now, it doesn't always happen. Here we have when we closed at the low, we got pretty aggressive after that. We did technically come down and put in a lower low then, but we took a swing off of it. So it's not 100%, but we know probability favors continuation on that. And now, again, we have confirmed into a downtrend. We have a high, a low, a lower high, and now a lower low. So to me, the momentum is to the downside, and the S&P technically hasn't even confirmed into a bear market yet. 200 exponential has flipped over bearish. 200 simple is just flat right now. It's very, very close. It's probably a day away. I mean, tomorrow we'll probably, open and immediately say we're in a bear market. But, I mean, it is what it is, guys. There's no surprise. We've been talking about it for a while now, so. So NASDAQ, IXIC, obviously this has been a bear market for a while, flipped over quite a while ago, came back up, got rejected, selling off. We hit one of our key levels to the downside already, which is our next fib. We have bounced that once already on the 236, came back up, got rejected at our resistance turn support. failed to reclaim that level. 200 exponential and simple are angled to the downside. We failed to rally the 8 and 20 back to the upside, and now we expect to see continuation. Now, could we get some bullish divergence at a key level? Could we hit our measure move breakdown, from our, neckline to top of the pattern? Do we bounce the 382? Sure, one of those things is going to happen eventually. We're not just going to sell off forever. Slinky theory in full effect. A high, a low, a lower high, a lower low, a lower high, a lower low. So then what? Another lower high probably. Eventually, right? So that's our slinky just going down the stairs, just stair stepping its way down. We don't know when the last stair is going to be, but we know eventually there will be a last stair. But we don't say on stair number 2, that's it. That was it. It's done. No, we just started going down the stairs. Same way we've been going up the stairs this whole entire time. We know once we go from the bottom, of our CVD sell-off, that Rona dump, to the top right here, we know that once we hit the 236, we confirm that we can officially be Fibonacci from the bottom to the top. Once we hit that 236 and we hit it perfectly, so we know that someone else, the market makers, the whales, they're looking at the same thing we're looking at. We didn't just get lucky. It didn't just happen to hit that line perfectly and then bounce. No, we're paying attention to the same thing. And then what happened after that? Well, they did exactly what we do. What's our strategy? Okay, confirm the top is in once we hit the 236. Retest the 200 exponential and simple. Sell the rip. Before we were buying the dip every time. Now we're selling the rip. So now we sold the rip. We're in a bear market. Now we go lower. And then what happens? We bounce another key level. And then what do? We could take a scalp on the way up if we want, but we're counter trend trading. Okay, we're floating down the river. Maybe we're going to jump off and swim around for a little bit, but we know there's sharks in the water. We know there's piranhas nipping at our toes. We don't want to play for too long. We saw there's a gator swimming around. We don't want to get tired. We want to get back on our little floaty and make the easy money. And where's the easy money? It's to the downside. The trend is to the downside. So if we want to take a scalp off one of these key levels, that's fine. We could do that, but we understand that we're swimming against the current. So we're only going to do it for so long. That being said, there probably is going to be a nice scalp here, in the future at some point in time. But do we even want to take it at that point in time? Is it just going to be a day, 2, 3 days, a quick little bear market, face ripper rally to the upside, psych people out, fake them out, they buy into momentum, and then what happens again? Sell the rip. But we just retested the 200 exponential and simple. We just put in a lower low. So more likely than not, I think we're headed down to 12,000, possibly even, the 382. Or if we look at like the weekly or monthly, this is our longer term moving average down here. So in all reality, I don't think it's unrealistic to think we bounce somewhere in between the 382 and the 200 on like the weekly. But we got to make sure that we're shifting our mentality right now. You don't have to be bearish, be neutral. But don't be bullish. Not now. Not right now. Don't be bullish. The people that are like, I'm buying the dip. We're in deep value territory. This is a great place to be adding. We're picking up these things because they're awesome. That I hear this rhetoric nonstop from all these people, and they have credibility because they've been right for the last 2 years. Because every time something went down, you did buy it. But at this point in time, though, have they really even been right for 2 years? A lot of them have been right for 1 year. And then a lot of the stuff they've been saying they're buying has just been going down constantly. Like we forget about all these individual stocks that are down 30%, 50%, 75% that they've been telling us to buy, telling people to buy. Not me. I don't listen to them. I laugh at them. I make songs about them. I patronize them, in a fun way, not to be like mean or like disrespectful. I do it because it's hilarious. It sucks for people that listen to them and give them credibility, but we can be entertained because that's what this is. It's entertainment. It's obviously not financial advice. Anyway, so the Russell, let's look at what the Russell's doing. Here's our low down here. Here's our high right here. Here's our Wyckoff distribution. You remember how everybody always talks about Wyckoff distribution after it happens? They were talking about it with Bitcoin. I'm sure soon they're going to be talking about it now, with all these big indexes, the Wyckoff distribution, the throw over, the failed breakout, the fake out, the bear market, 200 exponential and simple rolling over, lower highs and lower lows. And we're in a downtrend. We're in a bear market. We hit to 236. Where are we headed to? We're headed to the 382. What do we know when we get to the 382? Well, it's a key level of support. So we're going to pay attention to 382. We're going to look for that bounce, that face ripper rally back up, stops out all the late shorters. We retest the 236 as resistance. Maybe by the time we get there, the 200 exponential and simple are at that level too. And then what happens? We roll back over. We come back down. If we break through that level, we head down to the 0.5 after that. We just keep reevaluating at each of these levels along the way. But we know the Russell is trash. We've been talking about the Russell being trash for so long. How long have we been talking trash about the trash Russell? I mean, what? It's been in this range since February of 2021, an entire year of just being trash and garbage. And that's just the technicals. You know, when we talk about the fundamentals, we know it's trash. Because what are all these small caps? I mean, they're zombies. This is the zombie index. They should change the name from Russell to zombie. Maybe Russell's the name of the leader of the zombies. Because this is trash. It's all zombie companies. They're garbage. I mean, maybe the NASDAQ should be the zombie, since it's full of straight up trash. Companies that don't even make money. XLE energy. So this is the trade right now. This is where the money's at. We know that. This is where the money's at. This is the only thing with momentum really right now. You know, gold putting in some highs, looking good, shorter term on the daily, starting to look like it's breaking out. You know, definitely building up a little bit of momentum. This is the only thing that's legitimately has momentum right now is the XLE to the upside. A lot of things have momentum. It's just in the wrong direction. If you're a bull anyway. So XLE has momentum, but it's losing that now. So we know it's, you know, had a couple close calls, kind of went sideways, got picked back up off the 200s, you know, went back down, got picked back up. We know it's building up strength because the 200 exponential is back above 200 simple, but we do have a sell by sell. We've left the bullish control zone. We're very close to crossing the 821 back to the downside, and this big juicy red candle right here basically engulfed, you know, almost 2 weeks worth of price action to the upside. So sure, is there some fundamental narratives going on with energy, you know, with Russia, with this, that, and the other, with pipelines, you know, and sanctions, and Germany, and oil, and nat gas, and sure, there's a ton of stuff going on with all that. And I don't know what's going to happen with that. And if this just shoots to the upside, sure, that's fine. But I'm going to tell you right now, I'm taking profits at these levels on some of my positions because it looks like it's probably going to roll over. It looks like it's probably, you know, this trade's a little too busy. Everybody's on the life raft now, okay? And, you know, there's a bigger boat. We just get back on that next bigger boat. The life raft's got a couple holes in it. Everybody went on the life raft because it looked like the big boat was sinking. Now the life raft looks like it's sinking. Everybody's on that. So we're going to get off the life raft. We get back on the big boat because everybody else got off of it. And now the big boat's fine. Life raft's sinking. So that's what it looks like to me. You know, I don't close all my positions all at once on something. You know, but I definitely take profits along the way. And I'll take profits early. If this just shoots up to 100 tomorrow, I'll be happy because I'll still be participating. But if it drops down to 50 tomorrow, I will still be happy as well because we've been participating from much lower levels and we took profits when the market told us to. So again, we're losing momentum here. We have a bunch of red histograms. We're under the slope line. We know every single time that happens, that's a micro top on the daily, corresponds with these various sell-offs. And each time, eventually we either go sideways for a long time and test the 200 or we come straight back down and retest the 200. So, you know, I'm looking to basically add back to the position probably around like 58 or something like that. So, you know, and who knows, maybe it just capitulates and we go into a bear market and the fears are over and then it's summertime and, you know, nobody's worried about gas anymore. No one's worried about the nat gas or the oil, or, you know, maybe OPEC comes out and says, hey, we're going to do, you know, 10 million more barrels per day, 100 million more barrels per day. Maybe they flood the market. Maybe we go into a recession and nobody needs gas anymore and we have the hottest summer ever. So, you know, I don't know what's going to happen. But what we know is in the meantime, we know what the market's telling us. It's giving us clues. And we're gonna follow the breadcrumbs. So NDX, NASDAQ, 100, basically looks the same. It looks a lot the same. I mean, it's at the 236 right now. It put in its lower low. It is basically rolling over at this point in time. You know, it is at support right now. So I don't want to just sell into this. But we did just basically have like a double top breakdown and put in a new low. So it definitely looks like continuation. Been a massive uptrend, and now we're losing support. VW. Oh, these were all the requests from last time is what it was. So we'll look at them for a couple more sessions and keep going. These were the requests from the group. So Vanguard, Ftse. This is the emerging market ETF. Okay, so we were just talking about this on, what is today, Wednesday? Yeah, so this is our Wednesday candle. This is our Tuesday candle. And then Monday we were closed. So we basically gapped down, tried to push back up, and then had a massive sell back off. So, we're basically just paying attention to this range, but we know it's in a bear market for sure. Emerging market's not the place to be right now. Now, arguably, you could say, well, I want to buy the bottom of this channel right here. I wouldn't disagree with you. You say, I want to buy the support here in blue. I wouldn't disagree with you. But, right now we're basically in no man's land. And, as long as the real markets, as long as the strong markets, as long as the stable markets don't look good, I don't expect the emerging markets to start looking good. So, is now the time to be adding to these positions, buying them down. I don't dollar cost average into downtrends. I don't do it. You can dollar cost average into uptrends because you're with the momentum. I do not dollar cost average into downtrends. It makes no sense to me because you're like, oh, I'll just buy the dip. I'll buy the dip. I'll buy the dip. I'll buy the dip. I'm out of money now. Oh, and now I'm down another 50% because I've been buying the dip and we just went into a bear market that lasted for a decade. No, thank you. How about no, Scott? So DAX, so Germany's ETF, the global X, DAX, Germany. Again, same thing, confirming into a bear market and just absolutely, capitulating. Well, I mean, it's not like a massive move down, but it's juicy enough that we are glad we don't participate in this, or that we didn't get stuck participating in this. I mean, 4% for an index, for a country index, like that's kind of a big deal, I would say. But I mean, it's off massively off its highs. Did you want to be, and this is why we look at the DXY. Did you want to be in the dollar for this dump, or did you want to be in Germany for this dump? Well, I mean, it's not a huge difference right now. This down 17%. I think like the S&P or Dow is down like around like 12%. So it's not like a make or break right now. But who knows what's going to happen with global uncertainty? Who knows what's going to happen? Germany shut off all its nuclear power plants and went woke. So are they going to go broke now? I mean, I don't know. What's Germany's inflation? Anybody look at Germany's CPI lately and see some of their numbers? Shit's coming in hot. This rocket ship is descending towards Earth in a hurry, and it's on fire. And I think all the people inside are already dead. And we're just like going to stand up and look at the sky and say, oh, look, a rocket on fire, and it's coming towards us. No, we get the hell out of the way. And we could go investigate it once it crashes, after it's on the ground and the fire's put out. Then maybe we'll go have a look. We'll go kick some rocks then and see if there's any value left. Might look for a souvenir. No offense to any Germans out there as a metaphor. I didn't mean it like, in a negative way. I just mean things look bad right now. Globally, geopolitically, financially, energy, everything. Y'all fucking up. CN50. So China. This doesn't look good right now. We're at support. We're retesting these key levels. We're in a bear market. We're confirming. It looks like this is getting ready to break down. Now, granted, we have some previous resistance here, which we would expect to continue acting as support, but I think we actually have that drawn in. I think we have it drawn in on a longer time frame, but we have this ascending support in blue and green. We have obviously this horizontal support in white. But at this point in time, I mean, this looks bad to me. It looks like continuation. Everything looks bad to me. It has for a while. We've been talking about when things look bad, because we just use the same thing on every chart. You don't even need me. You can just do this. You can just do it yourself. I can take the night off. UK 100. So the FTSE 100 index, obviously United Kingdom here, doesn't look nearly as bad as some of these other ones, as it's at least still above its daily 200 exponential and simple. So that's definitely good. We've lost 8 and 21, but at this point in time, we're paying attention to these key levels. Like, we obviously have a key support level right around here from previous highs and previous lows. If we break down from them, our next area of focus is like that 7,200 level. But this probably is one of the better ones. But again, we're picking up momentum to the downside. Does not look good. Diageo, I thought this was Dogecoin for a minute. I'm like, what are you doing on my charts? What is Doge's ticker? Isn't it the same? Or is it actually Doge? It might actually be Doge. At the 200 exponential and simple, had a nice little pop up right here. We were talking about this bullish divergence, between the low right here and the low right here, the low right here and the low right here. So obviously that is confirming. We got the one green histogram. After that we got a little red histogram, and then bounce that off. Nice little green histogram. nice bullish divergence. I prefer at least 2 drives of bullish divergence typically. I do prefer that. But at this point in time, you know, it looks good. Obviously bounced up, did get a little rejection. So if it reclaims the 8 and 21, gets back above 3,700, I'll be paying attention to this previous high and then potentially a retest of the all-time high. But at this point in time, you know, you have to understand that what most of these algos, what most of these bots, what most of these whales are doing is anything above the 200 exponential and simple, you know, they're buying it as support. Anything below the 200 exponential and simple, especially if the slope has rolled over to the downside, they're selling it as resistance. So for this, we're still buying dips technically. You know, for the other stuff we've looked at tonight, we're selling rips. You know, and that can just as easily flip because the slope is basically flat on this as well. And the truth is, the more things that are dumping, the less people are just going to put money in random places. But if you're going to buy something, if you have to buy something, you know, there's only 2 things that you really want to buy. Something that is like a real value based on fundamentals, or something that is telling you based on technicals that it's at support and potentially going to bounce. So if I'm going to buy the dip on something, I want to buy the dip on something, you know, that is still postured in a bullish form, assuming that we can maybe continue to the upside, which again is risky, but at least has a decent probability of playing out. Or I want to buy something that has, you know, super strong fundamentals, you know, like positive, you know, like net profits, you know, and asset to book value, or some other fundamental like company analysis that's telling me that this is a good value right now. Like, you know, if it's trading at a discount to like, you know, cash, and the company is trading at less than the cash, or its assets on its books, or some other metric, you know, super low valuations, something. I'm not trying to buy the dip on things that are, you know, bearishly postured and trading at 100, you know, price to sale ratio with no profits. But that's just me. I also don't want to lose all my money. News from above says, Jewel Light stole your jewel knife by rhyme. I don't know what you're saying, dude. DXY, obviously showing some strength right here. Getting a nice little posture back to the upside. 8 and 21 crossing up with greens. Took this out so far. You know, next area to pay attention to are some of these little micro tops. But in all reality, more likely than not, coming up to like 97.24, probably to retest that high and then continue higher. So, you know, at this point in time, we had a little bearish divergence. That's fine. We basically consolidated for a while. What is this? It's refueling the jet right here. You know, we're basically just consolidating at the highs, refueling so we can go higher. If we switch over to our weekly, we look at that weekly, and what do? We popped above the 200 exponential and simple. We posture them to the upside. We have 200 exponential and simple, both blue and moving to the upside, showing extreme strength, basically back down at neutral levels around the 40 on these stochastics. And then obviously we are still very much trending to the upside with momentum in our favor, but we do have a bunch of red histograms, but we're basically going sideways. So we just had 1 green histogram on the weekly, and we had 2, 4, 5, 6, 7, 8, and 9 red histograms on the weekly. And where were we at? You know, when we were basically putting those in right here, and where are we at right now? Still right here. So this to me looks like a bullish reset. The indicator oscillator is trending down while price action just goes sideways at support. So more likely than not, this just keeps trending down. We just keep going sideways. Time is on our side right here. Nothing happens. This just keeps going back, keeps going back, keeps going down, keeps going down. And then eventually what happens? Well, now we can build up momentum back to the upside again. So in my opinion, this looks very bullish on the weekly. And then monthly, same thing. You know, we have basically reclaimed the 200 exponential and simple for the first time in this entire chart's history, going back to the 80s on the monthly. You know, we are at support. Both our 200 exponential and simple are postured to the upside. The 8 and the 21 are crossed to the upside bullishly as of like 4 months ago. And, you know, I mean, we put in a double bottom. We put in a higher low than here. We put in a higher low than back here. I mean, this is as bullish as a chart gets. If I showed you this chart and didn't tell you what it was, and I said, look, we have a low, then a higher low, then a higher low, then a higher low, then a higher low. And then I said, look, we have a high, then a higher high, then a higher high. You know, what's the next thing that's probably going to happen? Well, probably another higher high. Now, if we came down here and put in a lower low, maybe I would say something different. But people are going to look at this high and say, yeah, but we have a high here, then we have a high here. So we're in a downtrend. No, wrong. Because if they said that right here, what would happen? We have a high right here, and then we have a low, and then we have a lower high right here, and then we have a lower low. We're in a bear trend. Dollar's going to zero. And then what happens? They get their face torn off. So we got to look at momentum. We got to look at divergence. We got to look at the posture overall of what we're looking at right here. We don't just say money printing, dollar garbage, no more reserve currency. Yeah, because everybody else says that. And I agree because it makes sense. And it's easy to just agree with everybody. Wrong. Let's keep going. So look, this is the most bullish we have ever seen this, ever in all of history. I mean, if this, obviously this is a monthly chart. So the 200 exponential, if it continued out here and just in our heads, we kind of figured out, maybe it would kind of look like this, and then it would come down here, and then it would basically curve back up there. So there was this little point right here where we were on top of it. And what happened? We went absolutely parabolic. And that's what we're doing right now. We're getting ready to go absolutely parabolic on the DXY. Now, this is not the dollar in comparison to asset prices. This does not mean everything's going to zero and the dollar is going to strengthen. What this means is the dollar in comparison to the basket of currencies, which the DXY is. It's 6 currencies. It's the dollar compared to the British pound, compared to the euro, compared to the Canadian dollar, compared to the Swissy. There's a couple other ones in there that are very, very small percentages of it. But the majority of this, I think it's over 80% or something like that, is made up of those 3 currencies. So we know that compared to, do we want to bet on the dollar or the UK right now? We want to bet on the dollar. Do we want to bet on the dollar or Canada right now? I mean, obviously, the dollar, obviously. Before we knew what was going on in Canada, we definitely want to bet on the dollar. Now, we definitely fucking want to bet on the dollar. I mean, what's going on up there is absolutely criminal. That's the border we should be worried about right now and helping out, our neighbors to the north. It's absolutely a damn shame what is taking place in Canada right now. But don't get me started on all that. Anyway, let's keep going. So we know that Europe looks terrible right now. I don't think we're going to go to war over in Europe, but let's be real. Okay? What's going on with the euro? What's going on with Europe? What's going on right now over there? Not good stuff. Not good stuff. They're potentially, going to get into conflict for the first time in 70. I don't think it's going to happen. I really don't. The Russia-Ukraine thing, I don't think it happens. But it sure looks sketchy right now. So that's going to give the dollar strength in comparison to that basket of currencies. Right? Yep. Canada, we know what's going on over there. That's going to give the dollar strength in comparison to, that part of the basket of currencies. And then on top of that, we got the UK, we got Brexit, we got everything going on over there. I mean, come on right now. So if you have to, if we sit down at a table and we pick these, currencies and we lay them out, and let's just say those 4, we say you have to pick right now which one you want to bet on. Do you want to bet on the UK? Do you want to bet on the euro? Do you want to bet on the Canadian dollar? Or do you want to bet on the American dollar, the world reserve currency? And all I showed you was either this chart right here, or I showed you, the fundamentals. We talked about those things we just talked about. Which one do you think is going to be stronger a year from now, or 6 months from now, or 5 years from now? I don't even have to think about it. The dollar, obviously. That's an easy answer. Now, if you asked me that 6 months ago, maybe I would have said, well, Canada, maybe. Well, Europe, maybe. UK, maybe. I don't know. Who knows? But now the data is here. It's obvious. Anyone could pick it out. You don't have to know anything about markets. You could literally just watch a news program or look at this chart and look at the posture of this market and know the dollar is where you want to put your money. So this is a proxy in many ways, not just for those 6 currencies and the strength of the dollar compared to them, but because the dollar is the world reserve currency as well, it's also a proxy of all currencies. So is it possible one single currency strengthens compared to the dollar? Could the yen, could the yuan, could, something else? The Turkish lira? Sure, it could. Could it go the other way? Could Turkish lira go to zero? Could they make absolutely the worst decisions possible for inflation and money printing and what's going on over there right now? I think that's more likely. And so if we use the DXY as a proxy, we know that right now, if we're going to look for places to put our money, the best places to put them are denominated in dollars, which means American companies. And then when we look at, the stock market, we know, well, the stock market doesn't look good in the United States. So we can assume through proxy, by connecting those things together, that probably the stock markets in these other countries probably look even worse. And then when we look at the charts, we're like, oh yeah, they do. That makes total sense. It makes perfect sense. So we need to just make all these connections through different things and then look for signals. But we know going out into the future, the dollar looks extremely bullish. So 10 years from now, is the dollar still the reserve currency? I mean, maybe not. Probably not. Who knows? But what happens from now and then, if we're on the wrong side of that trade, I mean, you could lose everything. So that's the most important thing, is not being right 10 years from now, not being right 5 years from now, but being positioned correctly for the big move before it takes place, during the big move, and then getting off the train or the boat before it sinks, or the train before it crashes, or whatever other clever metaphor. Getting back on the raft and floating down river before the gator eats, our friend, or whatever. I'll jump in the chat really quick, and then we're going to keep on going here. We'll look at some of the tech stocks and keep ripping. Eli Karchoff says, at news from above. I might have missed what's going on here. My bad. Eli says, nice work. Learning how to rhyme one step at a time. Eli says, news from above. Oh, that's dude's name. My bad. If you like your indicator to switch 3 different colors each time it adjusts an angle, the light is for you, brother. And Eli says, here you get the real jewel, no light. Oh, I got you. It's like a knockoff version of the indicator. I mean, that's fine, man. People can do whatever they want. If you don't want to show support, and, it's not like I'm the only one who can, design an indicator. That's completely fine. There's not secrets here to what I'm doing. I'm on YouTube giving away my technical analysis, my knowledge, trying to educate and teach people. So, if you find value in that and want to support me, that's great. If you find value in that and don't want to support me, that's also great, man. I'm here. I don't want to say it's charity work. It's more like community service, what I'm doing here. I'm trying to educate people, trying to help people out, trying to be a good person and do my share for the community and the world, as opposed to just telling people what ticker to buy and giving them horrible, advice or not financial advice or whatever. So, but yeah, look, it's not like I hide it. I'm not like the blue line tells us. I tell you exactly what everything is. So, you can do whatever you want. But it's 100% the contributions of group members and the community that allows this all to be possible. It makes it all possible. It makes it worth my while, whatever. So I do appreciate each and every one of you that does choose to support my work. And if you do want to join that group and support my work and get these awesome fucking amazing indicators, reach out to me, and I'd be glad to have you. We'd be glad to have you. But that being said, let's jump back in. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So we got Tesla right here. Tesla obviously has peaked out at the 1.618 from the previous high to the low. Elon sold the absolute tippity top. We got the measure move breakout from the top to the 1.618, at which point in time we have consistently just put in lower highs and lower lows. We have now officially broken down below the 200 exponential and simple for the first time. Even when we broke down back here, we didn't break down like this. We broke down a little bit, kind of lost the 200 exponential. We didn't break down like this. This is the most aggressive breakdown we've had in this entire bull trend up. Even here, we broke down through the 200 exponential. We didn't violate the 200 simple. Here, we barely violated 200 simple. The last time we were down at these levels was back in October of 2019. So let's keep that in mind. Tesla's doing something it hasn't done since October of 2019. And realistically, when was the actual breakdown? Was back in here, where it basically chopped sideways for, what? This was 2014. It chopped sideways from 2014 to 2019. So 5 years of sideways chop. So does it have to just capitulate right here? No, maybe it chopped sideways for 5 years. It's not so bad. At least Kathy Wood will stop losing everyone's money. Oh, wait. When Tesla was going up, she was still losing everyone's money. Jesus, Kathy. But now we know. Look at this. If that's not Fibonacci just absolutely crushing the world, I don't know what is. We have a clear, before we even know this is the top. Before you ever even know it, look what happens. We bounce perfectly off the 200 moving averages and the 886. We come up here to the 786. We break through it, crush through the 618, almost tag the 0.5, come down perfectly to 786. Cruise back up here, find support multiple times at the 618, resistance at the 0.5, break through it. Resistance at the 382, consolidate, come almost perfectly up to 236, come back down, retest the 382. I mean, it's almost like a bot or an algorithm already knew that it was coming up to $1,200 and $50 or whatever ahead of time. It's almost like it was a predetermined target set in advance, and it was just a matter of time before it got there, and that maybe it was falling short here, running out of steam, and it just needed to consolidate a little bit so it could hit the target perfectly, which just so happened to line up with the 1.618. Conspiracy theory? Aliens? Math? I mean, pick your poison, A, B, or C. Maybe all three. I don't know. Is Elon Musk an alien conspiracy, math guy? I mean, maybe, probably, actually, honestly. Maybe he's just really smart. Maybe bots and algorithms have, predetermined that we could push the price up to, $1,250 using options. Maybe Elon figured it out on his own. Maybe it was a family affair. I don't know. SEC doesn't care. No one cares. There's no regulations. There's no rules. Not for the billionaires. Not for the richest man alive. I mean, I'd rather have Elon have all the money. At least he's doing cool shit with it. Anyway, so it tops out. We know these levels are substantial levels. We see how many times we interacted with them on the way up. So here, we bounced the 236. How many times? 2 times perfectly, and then came up and finally hit our target. So more than likely, what happens now? Well, we broke down from the previous high right here in purple. We're at the previous high right here in red. So if we break down from this level, which we'll probably find some temporary support, because that's our descending green support. That's also our red horizontal right here. We're probably going to come back up, retest this area, maybe get rejected at 900 one more time, and then roll over, and then what? I mean, eventually, where do we go? Probably 236. So if you told me, hey, came back from the future, I'm you're never going to guess what happened. And I say, let me guess. And you're like, no, you'll never guess. And I say, well, let me try. And you say, okay. And you say, what's Tesla's, what price did Tesla hit? What was the low? And I say, $539. And future me goes, holy shit, it did hit $539. How'd you know that? And I say, this dude named Fibonacci told me. And he's always right. Cool Sheets. Cool Sheets says, Satoshi live. When decouple from big bank traditional markets. Bro, all I heard for the last 6 years or something was, oh, once institutional money gets in, crypto's going to the moon. All we need is regulation. All we need is institutional money. Once they allocate their percentage to the moon, to the moon, to the moon. And what did I say for years? What have I been saying? Y'all, be careful what you wish for. Because what happened? Big money came in. Regulation came in. We got futures. We got derivatives. And now where's Bitcoin going? It's not the moon. It's not the moon. Before the big money, before the banks, before traditional markets got involved, before there was futures, before there was derivatives, you had to actually buy Bitcoin, or you had to actually sell Bitcoin. You couldn't just fake buy it or sell it through derivatives. You couldn't bet on the underlying price of the asset without purchasing it. So the same thing that people complain about gold and silver, that it's manipulated. How do they manipulate it? Through paper trading. What is paper trading? Futures markets and derivatives. Wait a minute. So Bitcoin's outside the system, can't be manipulated. There's only 21 million. Hooray, it goes to the moon. And then all of a sudden it's like, oh, thank God, institutional money. Oh, thank God, futures and derivatives and ETFs. Yay, hooray. And now what's happening? It's not going up anymore? Oh my, wait, hang on. Oh, so they're doing the exact same thing they do to gold and silver? Oh, so it doesn't matter that there's 21 million because you don't even need Bitcoin anymore? You can just bet on it without actually buying underlying asset because of derivatives? Oh, okay. And we're surprised it's not going up now? Like for real? I mean, again, future me comes back. Oh my God, you're never going to guess what happened 5 years from now. Oh, really? Tell me what it is. Bitcoin went to zero because the derivative markets drove it down into the ground and everyone got liquidated and capitulated and something new came along and blockchain is amazing. It's changing the world, but Bitcoin's dead. And I would be like, yeah, it makes sense. I mean, will it go to zero? No, I don't think it'll go to zero. But would it surprise me if we break down below 20,000? Would it surprise me to see Bitcoin at lower lows than it ever should go to? No, because derivatives, that's what they do. When you have to buy and sell something, it moves the price based on buyers and sellers. And that creates a market. When you create derivatives, you no longer have to buy and sell that asset. Therefore, you can manipulate the price without actually buying and selling that asset. Previously, and this is exactly why they have laws in the markets that tell you can't naked short. Because what is naked shorting? You borrow, you don't own that stock, but you want to sell the stock because you're convinced it's going to go down because it's a piece of shit. The company sucks. And you're like, this company sucks. I'm going to bet against it. But I don't own it because I never bet on it to begin with. So now how do I bet against it? I borrow the stock from someone else. I borrow your stock because you believe in it. You let me borrow it. I pay you a fee every single week or month or whatever, interest on the loan that you gave me of your stock. I sell it into the open market, drive the price down, and then I buy it at a lower price, and then I give you back your stock. That's shorting, but you borrow it from someone else. So naked shorting is just selling it without anybody like actually borrowing. So you end up with too many shares net short, more than there is actually like available. And that's why there's laws against that. Well, once you start creating derivatives on a market like gold or like silver, you start paper trading, or now crypto, Bitcoin, now there's naked shorting all over the place. You don't even have to actually have the Bitcoin to sell it. And then you could take out massive amounts of leverage and you can bet against Bitcoin without anybody ever even buying the Bitcoin. So who gives a shit if there's 21 million? I don't care if there's 10. Not 10 million. I don't care if there's 10 Bitcoin. Who cares? We can just bet on the prices if we had 21 million of them. It doesn't make any sense. People are brain dead. Everything that people asked for, they got it, and now they're complaining. Why no moon? Well, because you got what you asked for. All the time. It's like one of those horror movies from like the 90s where you like, what was it? Like the monkey's paw or something like that? I can't even remember what it was. But it's like one of those horror stories. You find like that little monkey's paw and you like pet it and like a genie pops out or whatever it was and you get 3 wishes and you're like, oh, I wish my wife came back from the dead. And then instead of like her coming back and being fine and like, being in love and her still being like hot and great and amazing, she comes back as like a zombie and like eats your face or whatever. And then you're like, oh shit, that was a horrible wish. And then you're like, oh, I still got another wish. Well, I wish, my wife didn't come back from the dead. And also I was super rich. And then you're like, granted your wish. And then you're like, oh, I'm super rich. Everything is great. And then it's like, oh, you're rich because, your parents died in a horrible car accident and you got like a settlement from it. And now you're getting sued by like your brother and sister because they want part of that settlement and you all hate each other. And you're like, oh man, this is horrible. What a terrible wish. That's literally the crypto wish. Like everything y'all wished for came true and now it fucking sucks. But we don't have a genie. We don't have a monkey's paw that we can rub to get back our wish and try again. Or there was that movie with Brendan Fraser with what's her name? That hot British chick, Elizabeth Hurley. And she's like the devil and comes back and lets him with it's the same thing, but it's real. Not that actual movie, not the actual story, but that's like the whole saying, careful what you wish for, because you might not like what you actually get. You might get your wish, and it might just not pan out. That's what we're seeing. So Tesla, let's keep rolling. Let's keep rolling. Your boy's in a goofy mood today, so hope y'all appreciate my analogies and 1990 movie Gremlins. That was a good one too. I love Gremlins. Don't feed Gizmo after midnight, bro. The Mogwais. All right, let's keep ripping. What about Intel? How's Intel look? Intel looks terrible, guys. It looks absolutely horrendous, okay? But on a positive note, it looks like it's headed down towards our first target, down here at 35. Remember when Intel was 60 and I was like, yo, talk to me when Intel's 50. And then when Intel's 50, I was like, talk to me when Intel's 40. Well, we're in the 40s now and we're headed much lower. We got a key support right here in yellow at, roughly in between $42 and $45. When we break down from this level, we have a bunch of interaction, price action around this point. We keep breaking down from here. We're headed down to where I think we complete the A, which is like mid to high 30s. So Intel is terrible. They have a lot of potential into the future, but they have a ton of bearish divergence on the monthly, and they also did not take out the all-time high from the year 2000. So 22 years later, and Intel didn't even get back to its previous all-time high. So, you know, it's basically like XRP of, like, you know, chip companies. NVIDIA. So NVIDIA, you know, to me is the fastest horse in the race. And it looks terrible. You know, obviously in a descending channel or descending broadening wedge, breaking down, had a retest of 200 exponential and simple. What do we want to see when we see a retest of 200 exponential and simple? We want to see a touch and a go. We want to see a touch and a go. We don't want to come back down to it. And if we do, we want to see a higher low like we see here. And then we want to see a higher high right afterwards. We don't want to keep bouncing off it, chewing through our support. And so far, you know, we're basically selling off, hitting it, putting in another lower high. So what does NVIDIA tell me right now? It still has a tiny bit of hope left. There's still an itty bitty little bit of hope that it could break up from here and break to the upside. But the second we take out $219, that's our line in the sand. Because if we take out $219, it's a high, then a low, then a lower high, then a lower low, then a lower high. Then we just got another lower low, another breakdown, another move back down to the downside. And now we're doing something we haven't done a single time on the entire way up. And I'm going to tell you right now, you know, we have all these obviously like Fibonacci extensions. You know what? Let's clear this trash out of here. We have all these Fibonacci extensions that we've been using along the way to predict our targets into the future. Now we need to really start paying attention. Okay, do we need to start looking back at like 2018 lows down here and start fibbing from the bottom? Do we need to look at our Fibonacci from here and start fibbing? Do we need to start breaking this down to like some kind of 5-wave structure? You know, what are we doing here? My first inclination would be to kind of do something like this and then see how that lines up. So that looks pretty good. That looks really damn good, honestly. So, you know, is this like a 5-wave structure? I mean, without going into like too much detail here for like an Elliott wave type structure, this looks like that's probably a 1 and a 2. This looks like this is probably, you know, a fake out top for the 3 comes down, but this is really the top of the 3, and then that's our 4. And then this is probably our 5 right here. So it looks like this is a nice 5-wave structure. We don't violate the 1 with the 4. The 3 is longer than the 1, you know, or obviously just not the shortest, but it's longer than the 1 regardless. And then at that point in time, you know, if we wanted to verify this along the way, or if we were, you know, fibbing this along the way, what we look at, well, this is a 2.618 Fibonacci extension of the move from the 1 to the 2. So that looks pretty realistic. What if we fib from the top of the 3 to the bottom of the 4? You know, that's basically a little over the 2.618 Fibonacci extension. That looks pretty realistic. That looks like, you know, this is obviously, you know, obviously respecting the fibs pretty good. And then obviously on the breakdown, we tag the 236, put in a lower high. We break down from the 236. We come down to the 382, which just so happens to be the previous high from the 3 and the 200 exponential and simple. We come back up to the 236, retest it as resistance. We get rejected. So what's our next target to the downside? Easy. I don't even have to tell you guys because you already know. Because we just do the same thing over and over and over and over. And that's how you win. We don't need to learn 1,000 punches. We need to learn how to throw that one punch, you know, 1,000 times and just do it perfect. And that's what we do. You know, and then we slowly add, you know, now we got this jab mastered. Let's worry about our 2. Now we got that 1-2 mastered. Let's worry about that 3, that left hook. Okay. Maybe we toss in an uppercut. I don't know what's going to happen next. You know, maybe it's going to be a low kick. Maybe it's a teep kick. All right. But the fact of the matter is, we just consistent, do the same thing over and over again. We define our rules. We keep a trade journal. You know, we practice risk reward. We practice position sizing. All these important things over and over again. We respect the moving averages. We respect momentum, and we're just consistent. So consistent, it's boring. One could argue that we're mechanical the way we do things. But that's how we succeed. Because we take our opinions, our emotions out of it. And then we can, you know, have fun with this shit. Like, I mean, I'm having fun. You guys having fun? Let me know in the chat if you're having fun. Are we making TA fun? Do you guys like making money? Obviously not financial advice. But, you know, everybody else is getting rectally destroyed right now. You know, and we're behind them, breathing heavy in their ear, telling them, shh, it's going to be okay. But it's probably going to hurt for a little bit before it is. So that was a horrible analogy, but also kind of true. So anyway, NVIDIA, where we headed? NVIDIA's coming down to the 0.5, $200, that $200 holla, okay? And when we get there, what happens? Maybe we buy it. You remember way back here when we were buying the dip at 200? You remember when we were selling the rip over $300 for a quick 50% move? You remember when we were screaming about NVIDIA and semiconductors and just absolutely ripping when we broke out right here at $153? Well, actually at the time it was different because that was before the split. But, you know, price-wise, according to this chart, I mean, I think it was when NVIDIA was at, what, 600 or whatever? But, you know, regardless, you guys know what I'm talking about. So now we're right back where we started at that 200 mark. So do we want to buy it again? I don't know. We'll have to see what it looks like when it gets there. Because it's going to look like a bear market when it gets there. And what do we know? What are the 4 horsemen of the apocalypse? What are the 4 horsemen of the apocalypse? I know you guys know it, but I'm going to tell you anyway. I should turn off like delay on the stream. I always forget to. So you guys can like in real action, like, you know, respond to me. I'm too impatient to wait, whatever it is, 15 seconds. So 4 horsemen of the apocalypse. What are they? Yield curve inversion, energy spike, semiconductors topping out, transportation sector topping out. 4 horsemen of the apocalypse. When those 4 things happen, recession or depression is 100% of the time. And typically when we see an energy spike, you know, that's like whatever the other ones are. I can't remember. It's like chaos and this and that. And that. When we see that energy spike, that's the worst one. Whatever that one is, that's the worst horseman. That's the one that doesn't even have to show up and everything goes to shit. But when we see him, when we see that horseman, when we see that energy spike, that's that 2000. That's that 2008. That's that game over. So we got to be real careful because it's looking pretty spiky to me right now. You know, we're seeing people are like, oil's at, you know, levels we haven't seen since 2014. Nat gas, all-time highs, through the roof. Energy spiking because misallocation of capital, returning capital to shareholders instead of reinvesting because green energy. That doesn't sound good to me. That sounds like 2000. That sounds like 2008. That sounds like game over. It's like, you know, and then I turn on mainstream, you know, financial channels, CNBC, whatever, pick your poison, Bloomberg. Well, there's no signs of an impending recession. The consumer is strong. The economy is good. Everything is great. We're opening back up and things are normal. We don't see any signs of danger. Meanwhile, everything's melting down. I'm like, are you retarded? America's Finest says, hey, Crypto Trend Trader, great stream. Hey, thank you, brother. Appreciate the kind words. Eli says, message retracted. All right. I'm not really following, but that's what's up. I'm just kidding. Hella pet. Eli says, one HTR quitter, one hitter quitter. Jokes aside, that's probably one of the hardest things to nail down, is just executing the same strategy to get your best results. If one works, of course. Of course, dude. And that's why I always talk about it. It's all about what do we always talk about on this channel. And it's not like I invented this, okay? It's like from the Bible, you know, and we're biblically doing it in financial terms. You know, what's that old story? You don't build your house on sand. You need a solid foundation because otherwise all your work just gets washed away. If you don't have a solid foundation, sure, you could build a house and you could live in it for a while and things are going to be gravy. But eventually that storm's going to come in, and the storm always comes in. And you don't have a foundation, you're just going to get washed away. And it happens to everyone. It's a learning experience, okay? You ask any good trader, any good investor, anyone, and they will tell you that at one point in time, you know, they built their house on sand or, you know, side of a cliff, whatever it is. But they didn't put in that foundation correctly, and eventually it got washed away. It got blown down. You know, the big bad wolf shows up, blows your gingerbread house down because you didn't build that foundation right. And that's why it's so important to build that foundation. And then after that, once we have the foundation built, Then what do? Then we make the house look nice, make it comfortable. You know, we always keep learning. We keep sharpening our, you know, skills, our tools, getting better. And then what do? Eventually we dig a basement. We turn that basement into Bat Cave. And then what are we doing down in the Bat Cave? I mean, we're doing Batman stuff. All right. We're building a utility belt. We're filling that utility belt with a bunch of cool shit. And we don't need that cool shit, but sometimes when we're out and about, we're playing in these markets, something crazy is going to happen. And we reach down that utility belt, we're going to pull out some crazy shit that we don't need to use every day. But when we do, it saves us from a big drawdown, or it puts us in a position right before a big pump or something like that. So we have that utility belt. We don't always need it. We need the foundation. The foundation is there to protect us and build on. The utility belt is to do fun and cool shit with that we can tell our friends about. Okay? You know, make money, make a nice trade, get in and out of something right on time, see something coming that nobody else sees. That's what the utility belt's for. For good stories, for cool shit to happen. But the foundation is a necessity. We need that. Because sure, a grappling hook might get us out of a bad situation here and there. But if we don't have a foundation, you know, we come home to tell everybody the cool stories and the house got knocked down and the Bat Cave is, you know, full of water because it got flooded. But I mean, I don't think you can build a basement without foundation. So, but you know what I mean. Enough of the metaphors. Let's keep rolling. Netflix still looks like absolute trash. Okay, everybody's buy the dip on Netflix. It's great. Let's go. It's filling the gap. Woo, hooray. Oh, and we're back at the lows. Trash. Bear market. Total trash. Massive gap down. I mean, I was calling Netflix trash for so long. What did we say this whole time? We were inside this range forever. It was total trash. It was dead money. And then what happens? We start the breakout. We retest for support. Nice scalp to the upside. What was this all because of? 1.618 Fibonacci extension. Is it because there's a bunch of new users? Is it because Netflix changed its business model? Is it because Netflix has a promising future? No, it was what? Squid Games? I don't even know what that is. I still don't know what it is. People tell me what Squid Games. I don't know what Squid Games is, but I know it did this. It exactly made the measured move happen and the 1.618. And then what happened after that? Well, we lost our key support here in green after we hit the measured move in the 1.618 Fibonacci extension. And whatever Squid Games is, I mean, where's it at now? Isn't there supposed to be a Squid Games 2? Where's that at? This is a massive breakout and then throw over. Now this thing's in a massive bear market. And what happened? Well, that same target we could have hit to the upside. We did hit to the upside. And now we hit that same target to the downside from the breakdown right here. And now we have broke down from key support here in blue, which was our previous top from down in 2018. So now if you bought Netflix in 2018, in June of 2018, you're now even on your position. Can you picture a situation in the future where more people are at home watching Netflix? Where Netflix is onboarding new users faster than it's ever onboarded new users in the past. Can you picture Netflix having another one-hitter quitter? Sure, probably. But does Netflix game plan change? Do they cut back on their costs and become more profitable as a company? Do they onboard more users into the future? Do they raise their prices and have more people join the platform and increase their revenue while also decreasing their sales and becoming a more efficient business? Maybe. But what's important, not just profitability, but growth. So maybe they can make more profits. Maybe they could grow some. But I don't think they're going to go out and grow and make profits. Not at the same rate they were. So if they're back at 2018 June prices, is it more likely that, sure, maybe they bounce from here, they get a push back up, a nice little bear market rally, sure. I would not be surprised to see Netflix back at like $472. Not at all. A retest of the breakdown level and that key, support becoming resistance, I would not be surprised at all. At all. But would I bet on it? Hell no. Because the truth is, if Netflix decides it wants to fall, where's it going to fall to? It's at support right now, broke down from that. So, what are we paying attention to? These lows right here? So, realistically, I don't know if we have some kind of like ascending. Oh, look, of course we do. Of course we do. So if we just kind of adjust this based on the close right here and kind of see what's going on, it looks like we're just hanging on for dear life right now. Basically just holding on. And then, you know, put that aside and let's look at horizontals, because not everybody's going to see that. It's a little less reliable. You know, what are we looking at? We're looking at something like this. Everybody sees that. I'm not the only person that sees that. Maybe everybody sees this. I mean, honestly, this is probably it, though. That's probably the support right there. There's probably really just that one. And this is just kind of like its buddy hanging out. But it's like, oh, I'm with you. It's like, I'm over here, though, a little bit. I wandered down a little, but I'll be right there. I mean, but this is it. This is the area to look at, 260. We're at 360 now. So, I mean, you want to buy the dip right now? And then what? It goes down another 30%? I wouldn't be surprised. I mean, the truth is, though, can you give me a Netflix scenario where Netflix looks good going into the future? Or did Netflix literally just peak and maybe never gets back to those valuations again? I mean, because I can't really picture one. I don't see a world where Netflix growth or profitability goes up substantially. If anything, I think more people are probably hip to what's going on, and now Netflix has to compete with YouTube, and it's got to compete with Disney Plus and ESPN and all these other, you know, streaming platforms and all this other, you know, Hulu and, you know, whatever, OnlyFans, all these other subscription services for entertainment purposes. You know, I think probably people have stolen their game plan now, and they probably have peaked out. So sure, maybe Squid Games 2 comes out and, you know, the fishing show takes off and everybody's out here catching their squids and, you know, eating their calamari or whatever the hell it is. I kind of know what it is, okay, for the record, but I really don't. But I kind of do. I know it's not about calamari, okay? I know that much. So I don't know. I don't see Netflix coming back. You know, and Facebook, same thing. I don't know if Facebook comes back. Facebook's dying. I mean, I don't use Facebook. The place is toxic. Social media is toxic. There's a bunch of old people on Facebook trying to come and check up on the young people, so all the young people left. They're like, I don't want to be on Facebook if my mom's on Facebook. And then all of a sudden, mom's like, oh, this Facebook's not all it was cracked up to be, but it is kind of fun. He's like, it's dying. It's going away. You know, I'd rather bet on, you know, something else, Instagram or whatever everybody else is doing these days. I don't even know what it is. Don't ask me about social media. All right, you're lucky I got a YouTube channel. All right, y'all. Apple. How's Apple looking? Apple's one of the best. You're the best, Apple. You're the best. Support right here. I mean, we're at it right now. So we got a high, we got a low, we got a lower high. We're at support right now. Don't want to break down any lower. If we do, I think probably at least for a short-term bounce, the 200 exponential and simple is probably a buying opportunity around 152 for some kind of bounce. But where does it bounce to? I mean, probably a lower high, honestly. Oh, okay. So we have some stuff in here. Okay, we drew some lines. We did some stuff. We did a thing. We'll use that. I like it. Oh no, is TradingView going to do its thing? Uh-oh, guys. We better not go back to having technical difficulties with TradingView. I mean, we already had the mic issues. That is technically my fault because I'm a moron, though. And I accidentally unplugged it. but TradingView unplugged it for sure. I'm sticking with that. But realistically, Apple, paying attention to Apple, you know, somewhere around here, this 150 to 153 range, you know, that probably is a buying opportunity. If I was going to buy something, it would probably be Apple, not some trash stock that looks absolutely horrible. It's getting actually crushed and makes no money. Don't make money, don't make sense. But again, I'm not really looking for buying opportunities right now. So Amazon, okay, so we know Amazon's been trading sideways inside this channel forever. Amazon's been in this channel since July of 2020. All right, so Amazon is a weird one, okay? Because I'm going to tell you how I feel about Amazon. I use Amazon. I like Amazon. I think Amazon grows into the future. I think Amazon is the type of company that will always innovate and never go away. They have enough capital, enough, you know, stuff going on that I think they take over. I don't know what the plan is. Maybe they buy out all the old malls that are closed down, turn them into Amazon distribution centers, and then little drones deliver stuff. Maybe you go in there and you like pick stuff out, and then you say, I want to buy this. And then they say, okay, great. You want a different size or a different color or whatever? We'll have, you know, one of our Amazon truckers deliver it here in 3 hours. And then you go walk around and look at other shit, you know, while the trucker like brings the stuff to the Amazon distribution center. You know, I don't know. I don't know what the future is going to be for Amazon. You know, it's probably going to involve drones and like actual like retail locations where you can like basically like test stuff out and then buy it. But I think Amazon has a strong future. But that does not mean in the meantime that it doesn't break down from here. Because again, if Amazon was going to crush, it should have been crushing. This stock should have went through the moon a bunch of times. And look right here. I know for a fact, Josh Brown, downtown Josh Brown, and all these mainstream dudes bought the breakout right here. And now they're trapped. It's a trap. Oh no, Josh Brown. Oh no. Down 20% on Amazon. How do you lose money on Amazon? You've got to be a sucker. Or just, I mean, I like Josh Brown, so I'm not going to rip into him too hard. And he did give it to my girl, Kathy, so I got to give him some props on that. He laid it on pretty thick, which was pretty funny because they're normally like pitching softballs. He's like, oh, we set the tee up for you, Kathy. You want to come up here and just hit it with the bat? And we know that you're getting up there, so it's a wiffle ball. So go ahead. All you got to do is just hit the wiffle ball with the bat. And then she's like, oh, I missed, and now my ARC fund's down 50%. Oh, but we're still right. The market's just wrong. So anyway, Amazon, double top, failed breakout, throw over, Wyckoff distribution. Huh, that's weird. Isn't that weird? Isn't that one of our tools that we have posted up in the trade group? The Wyckoff distribution schematic? It is, because we use that, because that's one of our utilities in the belt that crushes. And now here it is. Bottom of the channel, retest the heart line of the channel, get rejected, confirm bear market. And now what happens? I mean, it sure looks like this is about to break to the downside. Remember when we said right here, I would rather take the bet to the downside, because the bet to the upside is what, 11% and then a rejection? The bet to the downside is 27%. Since that, what are we at right here? 9% down since then. And that's nothing. We haven't even broken support yet. So when it breaks support, it's going to get real thick and juicy real quick. And then after that, I mean, I don't know. Does it get down here to our, blue previous all-time high from 2018? Does it go Netflix on our ass and just give up everything that's happened for the last 3-4 years? I don't know if it goes down that far. But you know what? I'm going to be looking for it down here in that deep value territory. Google McDougal. At support right now. Below the 200 exponential and simple. 200 exponential is already rolled over. 200 simple still has a little momentum to the upside. Again, Google still looks better than most, but we do not like to see double taps on the 200 exponential like this. We do not like to see that. And the truth is, if we break down through that previous close on the daily at 2,521, it looks like we're going lower. Now, granted, Google is in a weird spot because it did put in a new all-time high right here. So yeah, that was probably just a crazy, pump, stop loss hunt / throw over trap. Yes, it probably was. But technically, even if we do take out this low right here, we technically have not confirmed a downtrend. And it will take some time for that 200 simple to roll over. So this actually is still postured more bullish than most things are. And of course, obviously, I love Google. I love YouTube. It's a great platform. It loves me. We work together. We're partners. We're buddies. I couldn't think of anything negative to say about them at all. Especially because I'm probably pressing my luck a little bit lately anyway. So let's keep moving on. Let's look at Microsoft. I mean, look, we were talking about this head and shoulders in theory a while back, and I told you I didn't love how it looked. I believe it was up here. I didn't love how it looked because I like to see it a little more symmetrical. I like to see a long drawn out left shoulder and a long drawn out right shoulder. But we did come down the heart line. We got the perfect bounce back up. We topped exactly in our area right here. And now look, we're back down at support. And what happens now? I mean, we're below the 200. It's flipped over. We're below the 200 simple. It's still got a little momentum to the upside. We couldn't revert the 821 back to the upside. So what do we know has to happen before we could ever get bullish on Microsoft again? We have to flip the 821 back to the upside and flip them green. So we're not even close to that. Matter of fact, we're at support. We have a lower close on the daily. So we have a very clear high up here. We have a low. We have a lower high. And now we have a lower low at support with a giant head and shoulders pattern. So we know the measure move of the head and shoulders is basically from the neckline to the head. So it doesn't have to happen. Maybe it underperforms. Maybe it only comes down to 382. But we know we already came from our fib back here from that Rona dump all the way up to the top right here. We already came down and tagged the 236. So we have confirmed we put a top in. We confirmed that we put in a lower high. We confirmed that we have a potential topping pattern, the head and shoulders. And now we confirmed that if we break down from this level, that, essentially we're going to move down to the 382 next, and then possibly hit that full measure move down to roughly the 0.5. So next target to the downside on micro, soft, probably coming down here to that 382, right around that, 240 level. And then after that, we pay attention to 0.5, 215 to 220, somewhere around there. But I mean, that it sure looks like it's going down there to me. If you're like, but give me the bullish case. I mean, we bounce right here and we come back up and retest the 200 exponential on simple. We cross the 821 back to the upside. We come back up. We take out the right shoulder. We invalidate the head and shoulders and we start creeping back to the upside. Sure, it could happen for sure. But in order for any of that to happen, before any of that ever happens, the 8 and 21 have to cross back to the upside. We have to reclaim the 200 exponential on simple. We have to start stepping back up to the upside. Right now, the slinky is going down the stairs. So we have to confirm that it's no longer going down the stairs before we can start, moving back up. But right now, everything pointing down. And these are the strong ones. Netflix is the strong one. Nvidia is the strong one. Apple, Amazon, Google, Microsoft. These are the good ones. These are the winner chicken dinners. The Teslas. These are the good ones. We're not even looking at the ones that look like shit. We're not even rubbing dirt in Kathy's wounds right now because she was crying on CNBC and we don't hurt her feelings anymore. Okay, it's bad enough she's losing billions of people's dollars. It's not funny. That's not funny. I mean, we're here screaming at the top of our lungs trying to warn people for how many months? And by screaming at the top of my lungs, I mean making silly songs and posting them on my YouTube channel that no one watches. But hey, it is what it is. I mean, we're having fun with it. You guys found me, so we're doing something right. All right, what's going on in chat? One hitter quitter. Eli says buy the dip. That's right, bro. Buy the dip. And then the dip takes a dip. And he says Paramount doing Squid too. Yeah, I honestly don't even really know what Squid Games is. I mean, I've heard people talk about it, but I really don't watch TV like that, man. I watch boring ass news and finance stuff. I still read from books. I know that sounds crazy, but I'm one of those guys. One of those weirdos. If you can sit and stare at TV, you can qualify for Netflix. I didn't even think Netflix was a thing. I thought that was code for hooking up. I didn't think that was an actual thing people did. I'm like, you can't watch Netflix and also chill. I'm like, let's be real here. You can only do one or the other. You can't do them both at the same time. So what are we doing next? You guys want to do crypto? Let's do crypto. All right. So, I mean, not a lot has changed here on crypto. Let's be real. So we got the futures chart. Everything looks exactly the same. We confirmed the 821 to the downside. We confirmed the 200 exponential and simple to the downside. We're clearly in a bear market, 100% for sure. Definitely just putting in a series of lower highs. And, as of now, lower highs and lower lows. We did come back up here and put in another lower high. So technically, we're not putting in another lower low until we come down below 3,500 on the daily. But we're at 36,977 right now. And we took out obviously this little low we have right here. I mean, this is obviously just trending downward. So there's nothing really. We have a key support right here from on the way up that's, temporarily holding for right now. But it doesn't look great. I mean, we broke down from key levels. Once we took out this candle right here and put in this nasty, nasty daily and failed. I mean, realistically, this was our rejection, indecision and then rejection. But once we failed to basically get back above the 200 exponential and simple, it looked like an underperforming move to the downside. And then on the, what was that? Oh, is that the spot chart? Oh, sorry. Okay. So I thought that was futures, but it's spot. But I mean, it's not like it matters. Same thing. So obviously bear market. So we had this massive channel going down here. We broke up. We essentially hit our measure move to the upside. Fell a little bit short. Confirmed the bear trend. Broke down from that green support. I think it looks better on the 4 hour, honestly, because this little outlier is kind of sticking out the bottom. And then obviously 821 crossed the downside. We had some shorter term time frame stuff. We were looking at potential bullish divergence, but of course just got continuation and played out to the downside. So Not going to go into long-term targets on Bitcoin. Go watch the Bitcoin long-term target video, the same one. Everything has come true in it, and it's still coming true. So it's probably just going to continue keep coming true. But we know, obviously, this was a high, that was a low. This was a higher high. So no matter what happens right now, it doesn't matter. This is only just the beginning of a downtrend because we did put in a higher high right here. So we have a high here on the macro, then we have a low, then we have, potentially a lower high. I mean, this sticks out enough that it's a lower high. So now, we're paying attention for a lower low. The lower low is from this point. It's not from this point. Now it looks bad, obviously, if we break down below 30K, but this is really the lower low right here. And then obviously there's been a series of lower lows along the way. But, I mean, what is this? Is this a head and shoulders? A little slant, a little weakness right here? Do we get a measurement down from here? I mean, I don't know. You guys know how I feel about this. This looks like a gigantic double top to me. And everybody's like, Bitcoin couldn't have topped out. Didn't get a blow off top, bro. It's got to get a blow off top. Sure, it can't get a double top. It can't get a rolling correction. Are you sure? Because there's two types of tops and bottoms. There's like, double tops, kind of like rolling corrections like this. And then there's blow off tops, which is like a spike high and then a breakdown. So this is 50% of the tops look like this. They're just not as exciting because there's not a blow off. I mean, but it's pretty damn exciting. We went to $70,000 from $3,000. Jesus, what do you guys want from Bitcoin? Fuck. Magic internet money. I mean, what do you expect? Is that not enough? I just picture like Bitcoin is like, one of those action heroes. Or am I not good enough for you? $70,000 Bitcoin. People are like, Bitcoin's trash. I can't believe it's underperforming. I'm like, it went to $70,000 and it's magic internet money. Like, what do you want? Jesus. You can buy a house in Chicago for that much. You probably buy a house in Chicago for $10. Might be a crackhead living in there, but Ethereum. I don't think I say crackhead on here. I'm not sure. I don't know. YouTube. Me and YouTube, man. We got a love-hate relationship. We do. Ethereum looks very weak. Confirming into a bear market now. Looks absolutely terrible. Broke down from key levels. We had a massive ascending channel. We broke down from that. We can't. Okay, so look. We had our key resistance in red. We had this, our parabolic resistance. Key resistance in orange. Key resistance in yellow. Broke through the yellow. We tagged the orange. Retested the 200 exponential and simple. Double topped. Got rejected again at the orange. Breaking back down to what could act as support. The yellow right here. But more than likely what happens, another lower high. Or we just break straight down through it and put in a new low. Looks bad. We probably are headed down here to like 1800. Bitcoin dominance. I mean, we've looked at this like countless times, and this is a weekly, so not a lot changes. I mean, the key area to watch here is just staying above that 42%. As long as we're above 42%, 821 look like they're about to cross back to the upside. We crossed the downside right here. That that was a long, long time ago. So cross back to the upside right here. We retest the top of the range. Triple bullish divergence plays out. We retest top of range, consolidate. Then we pay attention to the measure move. If we get the measure move, we pay attention to 200 exponential and simple. Potential top, come back down. Altcoins are just getting absolutely wrecked. I mean, let's be real here. Total market cap looks like total trash. New low right here as of now on the weekly. Not that matters. A high, a low, lower high. I don't know. Do you know? Probably coming down here. 1.3 trillion, 1.28 trillion. But it's in the bearish control zone. We're oversold. Can't go any lower, bro. We're already too low. Well, they call it the bearish control zone because the bears are in control. They're holding the bulls down and they're spitting on them. And the bulls aren't fighting back. They might be dead. They might be dead. Retest 200 exponential. $1 trillion crypto market cap. Maybe the 200 simple. 750 billion, not even $1 trillion in crypto. Too many rug pulls? What? It's all gone. And it's gone. Solana looks terrible. Rolling over. Still inside our little pattern right here. Headed down to our target in green. The mean green Solana machine. 72.86. After that, maybe a bounce. Maybe it goes lower to the 618. 54, bro. I don't know, bro. Do you know? I don't know. Matic, I mean, basically just operating inside of this descending, broadening wedge. I mean, it was tight at the top. It's getting broader at the bottom, and it's going down. That's it. That's why we call it that. At the 0.5 right here, you know, tried to push up here, got a massive rejection. Probably goes lower. It already put a low right here, then a lower high, then now a new lower low. So it's probably headed down to the 382. You know, almost hit the measure move breakdown from our pattern. Realistically, though, Matic, $1.13. Yep, looks good. Avalanche broke down from that key support here in yellow. Okay, breaking down, came back up. Hard rejection. Hard rejection at 618. Tried to reclaim it, couldn't do it. Probably heads lower. Has some support here at the 786, $64. After that, the 886, a new low at $57. Better hold. Better hold, Avalanche. Looking like crap. It was a snowball, and now it's looking like an avalanche. Oh, man, dad jokes are just out of control today. Luna, I mean, we talked about this one. This is like one of the cryptos that actually looks good. Still terrible, still bad, but much better than the rest of the cryptos. Bouncing 200 exponential and simple, 200 simple cross and above. We got the 821 cross back to the upside. If I was going to bet on a crypto to the upside, it would be one that actually looks decent. Most of them look like trash. Luna looks okay. We put this trade setup in play last time, and what happened? Well, it played out pretty good for a little 10% move to the upside, 5% stop loss if it took out the low. Obviously didn't. Broke to the upside and then shot up from there. I mean, it's up like 20% since then. I didn't take the trade. I don't even know what this is. Might not even be real. Might just be a ticker with nothing behind it. Oh, wait. It is a crypto, so it probably is that. I don't know. I have no idea what this is. So yeah, I mean, retest of the 382. It probably goes up to 0.5. Almost got there on the wick right here, though. So I don't know. Maybe it comes back up here. Hits resistance at 67. Probably does. It probably does. I mean, it looks better than just about anything right now. So if you're going to bet on any trash crypto, might as well be this one. Maybe it's a good project. I don't know. I'm just saying. Statistically speaking, I can call any crypto trash. And I'm like right 99% of the time. So, and then DraftKings, still operating inside this horrible, horrible pattern. I mean, it had a nice little bounce up here. It's like, oh, DraftKings is up 20%. Yeah, but it's still down. Like 74%. It's down 74%. People are like, DraftKings to the moon. DraftKings up 18% in a single day. So if you bought right here, you're up 18%. If you're anybody else, you're down like 80-something%. So, I mean, not good, DraftKings. Not good. But I mean, that's how they spin it. They'll be like, DraftKings 2-day chart is up 20%. And I'm like, 2-day? We're looking at 2-day charts now? That's it? We're not even showing the whole week? We're not even show the whole week of price action? What happened to that? I'm like, this seems a little bit selective. Are you guys skewing the data? Let's take a quick little break. I'm going to grab a drink. Give me like 1 minute, and then we'll rip through our commodities and probably wrap it up after that. So let me know, sound off in the chat. Appreciate you guys, and I will be right back. All right, let's keep repping with our commodities. Remember, if you're just tuning in or if you forgot, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So we got gold, that yellow rock, looking pretty good. I mean, taking out that previous high right here, that was a key level that we're paying attention to at 1900. I mean, is this that fear trade? Is this that inflation trade? Is it the, world instability trade? Sure, I mean, looks pretty good to me. I've said this countless times. The thing about gold is I really, really, really want confirmation on gold. So, in the next like 2 to, when we take out the all-time high here, 8%, I'd be real happy to, keep stacking gold, keep accumulating gold, assuming that gold will go much, much higher. But because of, or possibly even paper trade gold in the meantime, and then convert it to real gold on the breakout. But because you have to pay premiums on like physical gold and silver, I really like over spot value. I don't like to take like sketchy potential trades on gold because I don't want to get trapped inside of a position. Don't want to end up stuck in gold for the next like 5 to 10 years and suffer like a 40% drawdown. Do I think it's going to happen? No. I mean, probably, the world goes into chaos and gold goes to new highs. Probably. But too much of a possibility, probability, likelihood, chance that gold just gets absolutely wrecked or goes sideways for a long, long period of time. So I'm really just not interested in that. I do like how gold is looking. It's looking better by the day. We're taking out key resistances, key horizontals, and it's looking more and more likely that we're going to head up to the top of the range. But I would not put it past gold to just sell back off and come back down here inside the range, back to the top of the range, something like that. So right now, but also I am positioned in gold, always, obviously. It's not like I haven't been talking about it for a long time. So, but it would not surprise me either to see gold go much lower over a long period of time. So I'm not looking to get trapped like the 2011 12ers. Silver's starting to look decent again. Broke back above the 200 exponential, taking out that local high right here. Starting to look okay. Looks like it's headed back up to the heart line at 25. After it breaks through 25, probably just comes straight back up to the top of the range, 27 to 30 bucks. If it comes back up to 30, could it break out? Does it break out? Will it break out? I mean, I don't know. We have to see what gold's doing by then. But right now we know from the gold-silver ratio that gold actually has been looking stronger than silver on the weekly. But we see silver now finally moving. So we're seeing a little pressure on gold right here. So essentially what we know from this is if we break up here, we confirm back to the upside. We take out the 200 simple at 82 silvers to 1 gold. We know that gold is the way to go. And gold is strengthening compared to silver. So gold is going up faster than silver is going up percentage-wise, or gold is going down slower than silver is going down percentage-wise. Or if we get rejected right here and this goes back into a bear market, which we confirm back here at 83 silvers to 1 gold, we know that silver is probably going to outperform gold. We're probably going into a bull market and silver is probably theoretically maybe possibly breaking out to at least like above $30. Possibly one day even to all-time highs. I don't know. You guys know that I did expect gold to silver ratio to go slightly higher. I mean, I had targets at 84. I had target at 87. My macro target was like 90 to 92. Could we underperform, just hit the 382, and then go down from here? We definitely could. We definitely could. And I wouldn't be surprised. I really thought it was going to come up to 0.5. Maybe it doesn't. If we go down from here, if this starts rolling over and selling off, silver is probably going absolutely nuts. And you guys know my target to the downside for the ABC correction wave on gold-silver ratio. Initial target is 62 silvers to 1 gold. Next target is 53 silvers to 1 gold. And of course, my macro target is 41 silvers per gold. So you can trade your 41 silvers for 1 gold at the bottom at the best time possible. But in the meantime, we know up here it was 130 silvers equals 1 gold. So it's important to keep that, keep it in check. Same way we look at like the DXY. So per member request, we have the gold to Bitcoin chart. So we don't have a ton of history on this. It obviously just goes back to like December of 2020. But essentially, looking like a double bottom at this point in time. I wonder if there's just a chart that has more history than this. Well, it doesn't matter. Essentially, it looks like, which one did I pull up? TVC? Calculated by TradingView? There might be a better one. It doesn't matter though. Regardless, what we're paying attention to is this sort of looking like a W bottom or a double bottom or a double W double bottom. It's looking like a World War II bottom over here. You know, we obviously have a low right there on the weekly, and then we have a lower low right here. We have a low right here on the weekly. We have a much higher low. We have a low right here, and we have a, I mean, I wouldn't say much higher low, but slightly higher low. So definitely looking at some bullish divergence on the weekly right here, and we're at the neckline. So technically, a breakout of this level would be from the bottom to the neckline. So when we break out, if we break out from that neckline, you know, that's going to give us the measure move to the upside. And it should take us to one misclick. Should take us up to 0.13 golds equals 1 Bitcoin. So Bitcoin gets wrecked or gold goes parabolic. Wow, that's crazy. So, I mean, if gold's at like 2,000 right now and Bitcoin, it just dropped like, how much in the, it just dropped like $1,000 in the last like 15 minutes. So if Bitcoin's at 3,600 and gold's at 1,900, I mean, that's 0.05. So that would be basically gold almost tripling compared to Bitcoin, or Bitcoin almost getting cut by 3 in comparison to gold, or they just meet in the middle. They just kind of meet in the middle. Gold goes up a bunch, Bitcoin goes down a bunch. So maybe gold doubles and Bitcoin gets cut in half and they meet in the middle. So Bitcoin is worth 18,000, gold is worth 3,800, and boom, we have our ratio. You just got ratioed, bro. So, I mean, obviously, I mean, it looks pretty damn bottomy to me. Looks good. Looks like based on this, you know, breakout right here, I'm going to really want to be in gold and really not want to be in Bitcoin. Silver Junior still not showing us much. Retesting. These look still much weaker than the actual underlying. Gold Juniors at resistance right now. Again, much weaker than spot. Still at the top of the range at the 200 exponential and simple. A break in confirmation outside of this, these probably do extremely well. I mean, if this breaks out from 44, the breakout target to the upside is probably like 55 to 58. So, I mean, that's going to do like probably much better than gold does, like at least short term in the amount of time it takes. 25% move to the upside, and they probably go much higher, because I would imagine the, you know, junior miners probably go to new all-time highs. GDX definitely goes to new all-time highs if gold goes to new all-time highs. I mean, I would think at least. Shouldn't say definitely, but very high likelihood. So in all reality, you know, could be a big move in the cards here. But again, I'm not going to be the sucker that gets, you know, ripped and clipped, because if you bought right here, you're still absolutely wrecked. I mean, you're down like 33% right now. CCJ, Cameco, uranium, again, you know, broke down, lower highs, lower lows, same thing, below 200 exponential and simple, rolling over. Looks like it's headed into a daily bear market. But let's remember, though, because people are like, you hate uranium, you're a traitor, you used to love it, you talked about nuclear power, and now you're mean. No. We confirmed into a bull market back here in November in 2020 at $11. We almost tripled up. We tripled up on some of our other uranium stonkeroonies. Okay? We don't have to just hodl them. We can get out at, you know, 26, 27, and then we can get back in at like 16. We don't have to just hodl. Maybe it looks like a head and shoulders here. Maybe it comes down and retests the 200 simple. Maybe we get an amazing buying opportunity at 12.29. I don't know what's going to happen. I know I like to lock in my gains. I like to take some profits. I like to play with the market's money. I mean, don't get me wrong. I play with my own money sometimes, but rather play with the market's money. I don't feel emotionally attached to OPM, other people's money. CCJ on the monthly, you know, this is just a temporary rejection off 200 simple. Not unrealistic to think that on the monthly, we come back down and we retest the 200 exponential. I mean, this thing's been in a bear market confirmed since 2015. Had a nice rip off the bottom. Let's see if we get it at 15 again. You guys want it, if you like it at 20, You're going to love it at 15. I know I will. I'll be loading up my pockets. Not literally, though, because I don't want to grow a tumor. I want to get radiation poisoning from that yellow cake. Not the ticker. TACX, those pot stocks. See, this is what we were talking about. Got to be careful, because I said I would not be surprised if we saw these down here at new lows. And I mean, there's nothing left at this point in time. $6, 587. That was that massive low. I mean, we can look at any of the pot stocks. They basically look the same. I mean, these things are just wrecked. I really think this is going to be the year of the gold miners and the pot stocks, but good God damn, they're getting wrecked. I mean, they can't get no love. But again, you know, this is like betting on the one-legged horse that's dying of dehydration, that's paying like 50 to 1 odds because it hasn't won a race in 10 years. You know, it's not the winner. This isn't the Derby horse, okay? This isn't the favorable bet. But, you know, at some point in time, pot stocks absolutely crush it? Yeah, I think so. I mean, I think the government likes money, and all they can do is have deficits. That's a fact. We know that's never going to change. So we know they want taxes. So they want, where are they going to get their taxes from? They're going to get them from crypto and probably cannabis. They love it. I mean, the government loves money. They love spending other people's money. So if they can figure out a way to get it, I mean, if they'll write you a prescription for a hard drug that's addictive, that's essentially the equivalent of heroin, I don't think they really care whether or not people are smoking weed. I think that they probably just want to get their money for it now. I mean, so in all reality, I mean, alcohol is at least as bad as weed. I mean, it doesn't smell as bad. Well, maybe it does. They're probably about the same. But I think realistically, you know, whether it's THC, whether it's CBD, whether it's medicinal purposes, whether it's, you know, fun ganja, whatever. I mean, I think realistically, this year they at least talk about it, even if they don't really do it. I mean, it's definitely like the type of thing that'll get you some votes. If the Dems come out at midterms and they're like, hey, we're going to legalize pot, bros. Come on, vote for us. Hey, come on, young people. Do you want to smoke pot and save the environment? Yeah, you were all about that. Go green. Well, we're doing it. I mean, even if they don't actually pass any laws, I think they'll at least like float it near midterms. So I imagine we get some kind of pop in the cannabis stocks, but probably just go to zero before that. So, but yeah, I think that's going to do it. I think that's going to do it for today, bros and lady bros. We did it. We made it to the end. Obviously doing the extra stream this week and every week from here on out. Thanks to the group members and those that have made their contributions that have unlocked the bonus stream every single week. So we have our Sundays at 8 p.m. Eastern Standard Time. We have our Wednesdays at 8 p.m. Eastern Standard Time. And now we have our Friday streams. And Friday will be our second annual stream. The second one we've done ever, but also this year. Starting at 11 a.m. Eastern Standard Time. Yes, that's 11 a.m. in the morning. And we're going to kind of focus that one a little bit towards the stock market wrapping up. But more importantly, what it looks like crypto is going to do over the weekend. That's even if there is crypto still. Because the way it's going down right now, it's probably going to zero. Crypto's going to zero. And if you don't know what I'm talking about, please Google or YouTube, crypto's going to zero. Eli says, where'd I go? Imagine how rough ETH would look if the cult wasn't staking most of their ETH and ETH 2. Dude, I thought Vitalik came out and officially said ETH 2 is not even real anymore. He was like, yeah, that thing about ETH 2, I know it's not going great, so we're just going to scrap that and we're going to do like Meta ETH instead, or like ETH Futurum. I think I mentioned it in the Discord, but so far that's my best trade of the year. Short Bitcoin, long gold. Yeah, exactly, man. Exactly, bro. Exactly. Rest obviously garbage. Also mentioned in the Discord. I think Luna bit to come. I think Luna bit to come. I'm not sure what you're saying. Damn. I forgot we even looked at Luna. Were you the one who asked me to look at Luna on Sunday? I can't remember who even asked me to look at that. But I hope I didn't do TA on it, put a trade set up to the upside, and then somebody shorted it. Well, hopefully they shorted it after it popped up. But, I mean, obviously it's not financial advice. You do what you want. Do they have uranium on Uranus? I believe so. I mean, they haven't confirmed it definitely, but according to Elon, there's some Uranus up there. It's a little bit. I mean, uranium up there. That's my pitch for Tilray. Hey, I paid double. Bro, I don't even want to like make fun of anybody or give anybody a hard time or anything like that. But literally, like whatever it was when Pot Sucks topped out, it was like 2018 or something like that. My boy was like hardcore and had made a bunch of money on Aurora cannabis. I mean, he was up massively. And I was like, bro, you need to sell it. Just put in a lower high. It's starting to roll over. It's topping out. It was like right around when Canada was like legalizing it, and it was like the whole big thing, and everybody was like FOMOing in. And I was like, bro, get out now. Obviously not financial advice, but you know, he's like one of my real bros in real life. You know, obviously shared my opinion and technical analysis with him. He was like, no way, dude, it's going to the moon. And like now, I mean, he never sold any of it. He just rode it all the way down to like nothing now. And every once in a while, we'll just be out having a beer or watching the fights or something like that. And he's like, man, I really wish I would have sold. I mean, it's not funny, but it's kind of funny. Where's my ETH? No V2, no ETH back. How does that work? I don't know, bro. You got rug pulled by Vitalik for sure. But he can just make you some more and give it to you, so it doesn't matter. I shorted Luna. You shorted Luna after the pump, though. But I don't remember. Were you the one who asked me about it? I really don't remember. I literally just like scratched down in like my little chicken scratch on actual real paper. And then I like put the tickers up here. Or I just throw them up on the chart right as the stream starts, whatever. Lucia in Discord regarding Luna. Lucia in Discord. I don't know what you're saying. Bitcoin's going to zero. Yes, dude. I didn't know for like 2.5 years I've been saying that, and no one had any clue what I was talking about. I thought that was like a well-known video that like everybody laughed at. Like I thought that was like, oh, the Bitcoin going to zero reference. Haha, you're so funny. For like 2 years, I'm saying like everything's going to zero, and people are like, it's not going to zero. You're dumb. You guys probably just thought I was insane, but it's actually really funny. I held my Tilray all the way here. Just like the excitement, I guess. Yeah, I mean, you're not the only one, bro. But, you know, unlike a lot of things, especially the pot stocks. I mean, you could argue that there's a lot of overvalued things, you know, real estate, stocks, cryptos, whatever you want. But there's not a lot of undervalued things. And I would say probably, you know, there's a couple really undervalued cannabis companies. You know, like asset to book ratio are like literally undervalued. And then also, you know, silver, obviously from all time high, you could argue that's undervalued. Like, I mean, there's a few other things too, but as far as, I don't know, silver could go either way, man. Same with like platinum, could go either way. I mean, you don't know really. It's tough too with all the paper manipulation and whatnot. Oh, it's funny. I mean, it's funny as long as you laugh at it, man. But that also means that, you know, your experience, you could have a good laugh, but also you're not over-invested in something. Because a lot of people, when they over-invest in something, like they can't have, you know, take a piss about it. From 17, I was still in the money, and then I wasn't. At least you're not like from like 300. I mean, my boy held from the tippity top all the way down. I mean, from the top. I mean, he bought it way lower, but he never sold it. Just imagine it's like, you know, you bought Bitcoin at like $100, rode it to like 20,000, and then it's back down at like $3,000. You're still up technically, but all you could think about is just how much you lost by not taking profits. That's my whole piece is they have to appreciate either with legislature or just earnings. Yeah, 100%, man. You know they want that money. Even if they lie and they don't actually legalize it, like federally, even if they just say they're gonna to get the votes. Like we know they'll lie and just buy votes. So I mean, you would just think they're gonna be like, oh, we're gonna put it on the ballot, we're gonna make it illegal, everybody wants it, right? And then it's like, yeah, okay. All the young people come out, all the other people that like it that aren't part of the majority come out, like whatever. I mean, I think they like poll people, and it's like 75% of people are either like for legalizing it or just don't give a shit. And then the other 25% of people are like, I mean, I don't really like how it smells, but I don't really care either. So, all right, but I think that's going to wrap it up for today. Well, I know it's not going to go to zero like Bitcoin. Everything's going to zero. It's going to zero. All right, appreciate all you guys. Make sure you tune in for the what is today, Wednesday? Make sure you tune in for the Friday stream, 11 a.m. Eastern Standard Time. I appreciate each and every one of you guys for tuning in. Make sure to like, subscribe, share with your friends. I appreciate all the group members for your contributions. Make all of this possible. Remember, most importantly than anything, this stream is for entertainment purposes only. Obviously, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Don't just blindly trust someone you see on the TV or on the YouTube or any influencers or Jim Cramer or whoever it is that you bow down and worship before. Just spend the time, get educated, learn how to do technical analysis for yourself, fundamental analysis for yourself, build that solid foundation, learn about risk reward, learn about, position sizing, learn about trending markets, probability of success, all that good stuff. Fully prepare yourself and, put in the work, and it will reap rewards for the rest of your life. Number one thing you can invest in is your education, because no one can take that away from you. If you are not willing to invest in yourself, you should not be willing to invest in anyone or anything else, as you are your number one asset, because you get to determine your future. I mean, unless you get like hit by a car, and then maybe you determine your future because you walked out in front of a car. So either way, technically it's still up to you. Oh, one more bot for the road. Hey, appreciate you. We got the thoughty body in the house. Hooray. Guess we'll report him. I mean, I kind of want to see what he's talking about. But yeah, that's it for today, man. Eli says they want money. Can't figure out crypto. Too technologically advanced. Seriously? Yeah, for sure, man. Alcohol, tobacco, weed, other recreationals will be the next name. For sure, 100%, dude. All right, bros and lady bros and bro ladies and undecideds. That's it for today. I appreciate each and every one of you. Everybody have a good night. Crypto trend trader. Oh, man. Ethereum's getting wrecked right now. At the lows. Bitcoin's not looking good. It's game over. Michael Saylor's almost upside down on his position. The clock is counting down to Michael Saylor being a loser. A loser. Not at life, but financially in his Bitcoin investments. But also at life, because he's a piece of shit bum. But that's it for tonight. Crypto Trend Trader, and I'm out of here.